That was a nice example, though. Very nice example. Let's see. Okay. I don't think it was GBP Audi. That's the signal I called out earlier. I'm pretty sure we didn't look at that one, did we? Let me see. I don't think it was that one. Anyways, let's just go ahead and get started. I wasted too much time already, so I'll just look for a new pair. Okay. Thanks for the help, though. We'll just leave it like that. Oops. Crap. Just dropped my phone. All right. Let's see. I'll go ahead and screen share, and we'll just look for something new, even though that was a freaking amazing example, but it's okay. Okay, so back to where we started. So now we have about half an hour. I'll probably run it like 5 to 10 minutes after. Okay, because I really want you guys to get this. This is very important information. All right, so let's see. Looking at the hour, we can look at the 15 as well. Let's look at the 30. 30 minute. Okay, let's look for a formation. Right away, I already have one here. 1 second, let me delete all this stuff. All right, and once again, if you guys have any questions, you guys know where to go. All right, I'll be looking at my phone and you can interrupt me in the middle of the session, okay? All right, so right here, we have a W formation. This could actually be the same one. I'm not sure, but okay. Right here, so we have the peak formation made, price comes back down and retests, okay? So here's a clear W formation. Let me see if I could zoom in so you guys can get a better picture, okay? There we go. All right, so we recognize a peak formation, okay? This is a peak formation. What is a peak formation? A peak formation is price goes to a specific area and pulls back away quickly. That's the main word right there. That's the key word, quickly, okay? Quick pullback. And we see that here. It comes to this price, but then it quickly pulls away from it, okay? Trapping traders over here, okay? If I were to sell, I would be selling this here. I'm just using, I wouldn't technically sell this, okay? I'm just using, me as an example. So I'm selling this here, and then I keep my trade open, and then I go to the restroom, and oh no, I see, and it's all the way back over here. This is 30 minutes. I wouldn't be in the restroom for like 2 hours. No, I'm just using it as an example, okay? So it drops over here, and it pulls away quickly. So it'll trap traders over here. So there's traders trapped over here, and they're like, oh, it's going to come back. I know it's going to go down. So I'm just going to wait for it to come down. So it goes up, it goes up, it goes up, and then it starts to come back down towards that price. So the traders that are trapped here, what are they thinking? Oh, they're thinking they're getting all hyped up and stuff because they were right. It's coming to that price again, and it's going to drop even lower. Okay, so price comes back down and it starts to retest it, okay? Now, one thing you must do is draw a horizontal line at the bottom of the lowest body on the first leg, okay? So we do that now. Okay, that's the lowest body on the first leg. Excuse me, okay? So we draw that horizontal line. All right, now price starts to come back down. So what do we look for when price starts to come back down? The price needs to touch or retest this line that we drew at the lowest body of the first leg. So it needs to touch this line. It needs to retest, okay? It can't just stop over here and get close to it. No, it has to touch or it has to retest. Okay, so it drops. It starts to drop. Oh, look at that. It retests and it wicks it. Okay, so the first thing on the checklist is this. First thing on the checklist is peak formation is made. That's the gray boxed area over here. Peak formation, where traders got trapped. Okay, pulls away from it. Now, second thing on the checklist, wait for a retest. Price starts to come back down towards that area and it begins to retest. Okay, third thing on the checklist, second leg does not break the first. Now, what do I mean by first and second leg? What in the market maker method, which is what I'm teaching now, is the first and second leg are the first peak formation of the W, which is here, okay, and the second leg right here, peak formation, okay. So these would be considered the first leg and the second leg, okay, right here, and then it shoots up, okay. All right, so that's the example there. So that's what I mean by the first and second leg, okay. So price comes back down, retests it. So now what do we look for? The third thing on the checklist. The second leg cannot break the first. What do I mean by that? The body, the lowest body on the second leg cannot break the lowest body on the first leg, which is this line, this orange line. The body cannot go below that. If it goes below that, it is not valid and it becomes a risky trade. Okay? We're not in the business of gambling, like Steve Morrow says. We're here to trade and we're here to win. Okay? So if the body closes below it, don't take the trade. Period. I don't care if it's 1 micro pip below the body. Don't take the trade. All right. So this one didn't close below. All right. So now what do we look for? After this candle closes, what we look for is an engulfing candle. What's an engulfing candle? An engulfing candle is something like this over here. You see that green candle right there? That's an engulfing candle. Okay. It's a quick pullback. An engulfing candle is a quick pullback, and the size of it is bigger than the previous. Okay, it has to be bigger than the previous. It has to be a greater amount of movement than the previous candle. Okay. All right. So now, do we see that on the other side? Because that's the fourth thing on the checklist. Yes, we do. Right there. Quick pullback. Okay. Now, what happens after the engulfing candle is confirmed? When the engulfing candle is confirmed is when the engulfing candle closes. As soon as the engulfing candle closes, you take the trade immediately on the next candle. Once the next candle opens, you take the trade. Period. Okay, no questions asked. All right, I just made actually I'll mention this after. Okay, so you take entry off of this candle here, this one here. Okay, you take entry there, and oh, it had a little pullback. Yeah, that's fine. That's okay. Don't be scared by that. It can happen. Okay, it actually happened today when I sent a group of my traders. I sent them a signal. Okay, they took the trade. It had a little bit of pullback. I told them just wait till it hits your take profit, and I'm going to show you guys where to place your take profit. Okay, so it comes back down. It scares traders. It induces more sellers. Okay, then it shoots back up. This W formation traps traders short. For those traders that are going short, the retail traders that are going short, it traps them short, goes long. Okay, so you take entry here. Now, where do you exit? Okay, your first exit is going to be the first place traders got trapped on the way up. All right, first place traders got trapped on the way up. Now, what do I mean by that? Basically, you look for peak formations or consolidation periods where traders might have gotten trapped. Okay, now they have to get trapped long. You have to look for places where they got trapped long for a W formation. For an M formation, they have to get trapped short. Okay, so here's one area. Okay, that's one area where traders got trapped long. Why do I say that? The reason why I say that is because if you look here, the market maker briefly went long and did a quick movement long, okay? They did a quick movement long, and then all of a sudden they dropped again. So they scared traders right here. Remember, this is the 30-minute chart. So these are intimidating moves because this one candle moved up for 30 minutes. For impatient traders, that's too much time. They want to see the money now. Okay, so excuse me. So many traders got scared, so they pulled their shorts out, not clothing. I'm talking about their trades. Okay, they pulled it out and they went long. Okay, they went long right here, and oh, they got trapped again. So they closed their trades out over here, and they went short again. They went negative on both sides. Okay, they went short again. And over here, they got trapped. Then they went long. Okay, so this is the reason why this gray box area, that's considered a place where traders got trapped because they briefly panicked traders when they went long all of a sudden. Okay, so what you do is in that area where traders got trapped long, you want to draw a horizontal line on top of the highest body. Okay, that's what I did here on this orange line. I'm gonna delete the previous orange line. Okay. Okay. So this orange line right here is at the top of the highest body on that trapped area. Okay. So you draw the horizontal body, the horizontal line. That's your first take profit. Okay. 1 second. Okay. So you draw the horizontal line. That's your first take profit. Okay. So you take entry right over here, right? Right over here. Now you can see immediately this candle went up and hit your take profit. All right. Now it's not many pips, but it's still many. Okay. That's about 22 pips right there. Okay. 22 pips. You easily got that with little hesitation. All right. So 22 pips you caught right there. Okay. Now I'm going to show you guys how you take profit 2, take profit 3, how you can take those. Okay. So back to where your entry was. Back to where your entry was, which was right over here. This candle right here. That's your entry candle, okay? You got in right there. As soon as that candle opened, that's where you got in. All right? That's your entry. So instead of placing one trade, you place 2. Okay? You place 2 trades. All right. So now this is what you're going to do. You place once your first take profit hits, what you're going to do is you're going to look, well, actually before that. So because you have 2 trades, your intentions are basically for this method are basically to go for take profit 2 on the other trade. One trade is for take profit 1, the other one is for take profit 2. Okay. All right. Now you look, what you're going to do is now you look for take profit number 2. Take profit number 2 is where traders got trapped. Excuse me. Where traders got trapped long. The next place traders got trapped long. Okay. So that would be this area right here. Bam. Okay. Now I'm going to highlight this. Traders got trapped long here. How? Because they made a quick movement back up, okay, and then they dropped it again, okay? This is a 30-minute candle. So they went up and they induced longs, and they basically convinced people, take out your shorts because we're going long. They scared them right here. They made them panic, okay? So that would be the next place where traders got trapped. Okay, so that is considered your take profit number 2. Take profit number 2. All right, so now what do? All right, so you place your 2 trades here. Okay, now one thing that I'm going to tell you guys, because I know I'm going to get some questions. So what if it goes back down? Could we take another entry? Yeah, of course. You can take another entry only if your balance and your risk management allows you to. Okay, if you are risking more money than you should be, don't take another trade. Okay, don't take one, because it could drop even more. It could drop to the next support over here and then decide to bounce back up. So that's what I'm telling you. Only place the right amount of trades, that way you won't get stuck. Okay, you can't afford that. All right, 1 second. What do you mean as a partial close, Matthew? I'm not sure what you mean by that. Okay, I'm gonna go on until he answers that question. All right. Once again, Matt. Okay. If you right-click on an open trade, you can modify the order and close at a portion of an open trade. As in, close part of your first trade and let it still run. Close part of your first trade and let it still run. So you're saying placing a trade, and then once it goes to my take profit area, instead of putting a take profit, I just do it manually, and it'll still run, but it'll take the profits where my take profit area is. Is that what you're saying? Oh, I see. I see what you're saying. So if I have a 2-cent lot, I can close out I can close out 1 cent of that trade. Is that what you're saying? Oh wow. How do you do that exactly? I had no idea you could do that. So they're basically saying that instead of putting 2 trades here, you can put 1, and once that trade goes up to that take profit price, you can go ahead and close half of your trade out. Meaning if you have a 2-cent lot, you can close half of it, which means that you will still have a 1-cent lot still open. Okay. Let's see, how do you do that exactly? You said right click on an open trade. You can modify the order and close out a portion of an open trade. Okay, so you have to right click to do that. Then you can go ahead and modify the trade. I had no idea you can do that. That was never taught to me. So that's actually really good to know. So actually that'll be a good idea. Okay. Okay, so back to the training. All right, so okay, so let's just let me just explain it my way first, and then in the future I can see what they're talking about and do it. Okay, but they're saying right click on an open trade, select modify from the drop down menu, and type in a smaller than your existing lot size. Okay, dropping is smaller than your existing lot size. And then the difference of that will close the previous trade, correct? Okay, sounds good, Matthew. They're gonna post a video. He's gonna post a video later, explaining that. Okay, that's helpful of you. I appreciate that. All right, so back to it. So you place two trades. See now I feel like I'm not teaching it right. All right, but you place two trades here. Now, one hits your take profit, okay? Now, the risky thing about take profit number two is that it's not always guaranteed. Take profit one is basically guaranteed, okay? Because take profit one, this line is used as resistance, okay? You can see as soon as you draw that horizontal line, you can see places, other candles start wicking. You can see that, look, wick, 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 okay? There's a reason for that. This is support and resistance lines now, okay? Wick right here, then drops, comes back, wicks it, drops, comes back, starts to wick it, like so many wicks around it, okay? That's for a reason, all right? So now look, all right, so bam, it drops, okay? After it takes your first take profit, it drops. Now your second trade is still there, but this is the thing. Once your first take profit hits, your stop loss for your second take profit will be placed where you break even. What does break even mean? Break even means that when the price comes back down and it goes against you, your stop loss will be where you don't lose money nor do you gain money. Okay? And that's where your stop loss will be for take profit number two. Take profit one, you don't need to place a stop loss, but you do need to monitor your trades just in case you get into margin trouble. But for take profit number two, you need to put a stop loss because take profit two is not guaranteed. Take profit one is basically guaranteed. Okay. So right here, you can see, okay, it dropped and it would have hit your stop loss. Okay. Take profit one is hit, comes back down, hits your stop loss, you break even. Okay, great. Take profit two didn't hit, but that's okay. But now I want you to look at this. I want you to look at this. All right, all right. Whoa. What is that? Is that another W? That's freaking awesome. What? Yeah, that's another W right there, inside of a bigger W. That's crazy, isn't it? It happens. You have to be prepared for the formation to appear. It can appear whenever, wherever. Okay? So there you go. Another W formation inside of a bigger W. Okay? W formation. Now, what is the checklist? Peak formation is made right here with a quick pullback. Okay, they pulled away from that price. Okay, now you wait for price to come back and retest it. Price comes back, retests it. Okay, retest it and it wicks it. Remember, first checklist, P formation made. Second on the checklist, wait for price to come back down and retest the first leg. But the body cannot pass the first leg, the lowest body of the first leg. Okay, and it did exactly that. It did not pass. So far, it's passed number three out of the checklist, which is what second leg cannot break the first. Okay. What's the fourth thing? You look for an engulfing candle. Whoa, look at that. That's an engulfing candle right there. Okay. Clear as daylight. All right. So you take the trade off of here. The second, as soon as this candle closes engulfing, you take the next candle. Take it. Don't hesitate. Don't don't put big lot sizes, okay? No, don't do that. But take the trade using risk management. So you take this trade right here, and now what do? Go to your second profit, second take profit. Take entry right here. Second take profit is this horizontal line right here. How many pips is that? That's 70 pips. 70 pips. Easy. Okay. Now, let me draw horizontal line there. Okay. So you can see take profit one was hit, drops back down, makes another W formation right here inside the second leg, and it picks back up. Okay. Take profit one is already hit. So they wanted to induce more sellers right here. So they dropped again, retested this peak formation, and then they made a W formation and rose. Take your profit on the second take profit of the previous W. Okay, plain and simple, easy 70 pips right there. All right, so that's how you do take profit one and take profit two. Now I'm going to show you guys a different example. I'll delete that later. Okay, I'll show you guys a different example. Let me see if I can find another one here real quick. All right. One second. Nope, nope, nope. Okay, that one's a little sloppy. All right, let me see. Let me try to look for a different. Let me show you guys an AM formation. Now the formations appear a lot. Don't think because I'm looking so long that it doesn't appear that much. It does. Okay. All right. Now let's take. Oh, okay. This is a nice one. A really nice one, actually. All right. This one looks like it might get you a lot of pips. Formations like these. All right. All right. So look at here. AM formation. Let me make sure you guys are still alive over here. Okay, good. All right, so AM formation right here. Okay. All right, so now what do? You draw a horizontal line on top of the tallest or the highest body of the first leg of the first peak formation. Then you wait for price to come back and retest it. Okay, so now you would draw lines across all peak formations. Okay, peak formation low right there, peak peak formation low right there, peak formation high right there. Okay, you would draw horizontal lines on all of these, okay? But you would wait for price to come back to it and retest it to see what it does. If it follows the checklist, you take the trade. If it doesn't, you don't take the trade. Okay, so it's not like, oh, I just chose that one because it already has an M. No, you can put horizontal lines on all peak formations and wait for price to retest it. Okay, all right. Okay, so M formation here. Now, the first thing on the checklist, peak formation made. Okay, peak formation right here, then a quick pullback. Okay, now you wait for price to go back up and retest it. So it's basically retesting a horizontal line, right? Paints a better picture. So draw the horizontal line, wait for it to retest the horizontal line. Now, second thing on it, there's a retest. This is a retest right here. It tests that price of the tallest body, the highest body, but it does not pass it. The body does not pass it, does not close above it. Okay, that's what you're looking for. Now, it wicks it over here. Now, the third thing on the checklist is that it does not break the first leg. Now, what I mean by that, the body does not close above the first leg, not even a micro pip. Okay, so you can see that it closed down here. Okay, cool. So now what do you look for? An engulfing candle. Oh gosh, look at that. Look at that right there. An engulfing candle right there. What do you do after that? After this engulfing candle confirms itself by closing engulfing, you take the trade right here. This is the area. This candle right here. As soon as this candle opens, you take the trade. Okay? Simple as that. Take the trade right away. You see profit right away. It doesn't even, you don't take any heat. It right away you take profit. Okay? Now, still use risk management because it could still come back up and retest. Okay, that is why. It doesn't mean it's not going to come back down and hit take profit. It is going to hit the first take profit, but it can come back up and retest this horizontal line. That's why you must use risk management. Okay, so you take entry here. All right, so now where's your first take profit? You look for the first take profit. Okay, there's the M formation right there. So okay, one thing I need to point out is that this, okay, for an engulfing candle for an M formation, um, to um, decide whether it's engulfing the previous, you can use the top of the wick, okay, this top wick of the candle, okay, you can use that top of the wick. You can't use the bottom. You can use the top of the wick on the M formation all the way down to the lowest part of the body. Okay, you can use the top of the wick to the lowest part of the body, and you can measure it with the previous one to see if it engulfs, and obviously it does. For a W formation, you would do the exact opposite. For a W formation, you can use the bottom of the wick with the whole body to see if it engulfs the previous candle. Okay. All right, so just to make that clear, you guys can still use that. All right, so now what do? Okay, so you take entry right here, right there. Now for for a W formation, I told you guys, look for the first place people got trapped long. Now, why did I say long? Because the market maker on a W formation is going up, right? It's trapping trader short and going up. The last leg on a W points up. So the market maker is going up, but he's going to hesitate to free the traders that got trapped long previously. That is why your take profit is where traders got trapped long on a W. Now, for our M formation, it's the exact opposite. You would look for where they got trapped short. Okay, where they got trapped short. All right, so now look. They got trapped short right here. Okay, they got trapped short right there. All right, these are peak formations. They got trapped short all around there. All right, so now look, that's easy 22 pips. Second take profit, 38 pips. Okay, now you can go on and go on. Now, this is the crazy thing. I believe it's a crazy thing. I haven't checked to see if it was a crazy thing yet, but let me tell you what the crazy thing is. Okay, so your second take profit is hit. Okay, now if you want to go for a third take profit, this is how you do it. I'm going to teach you guys how to do that right now. So you place two trades right here, right? And then once the first take profit hits, what do? You set your stop loss for your second take profit. And where's your stop loss for your, for your second trade? And where's your stop loss for your second trade? Break even. The price where you break even on your second trade is where you will put your stop loss. Now, break even once again means you do not lose money nor do you gain money. When price comes back and hits your stop loss, you would break even. You would end at zero. Okay, so you put your stop loss there. All right, so right here, if you place your second trade, it would not have hit your stop loss. Okay, reverses, comes back down, and it hits your second take profit. Off the same candle, actually. The same candle hits your first take profit and second take profit. Okay, so now I want to go for a third take profit. So this you placed, okay? So you want to go for a third take profit because you're feeling adventurous, okay? You drink a little too much, or you got a new girlfriend and you're feeling all hyped up and you want to do something special for Valentine's Day. I don't know what it is, but you decide you want to make more money. You want to go for your third take profit, okay? All right, and I'm about to explain that to you. So when let me tell you guys this: the higher the take profit you guys try to go to, the riskier it gets. Okay, the riskier it will get. All right, so now first take profit is hit, second take profit is hit. If you want to go for a third take profit, what you have to do is you have to place your third trade where your first take profit is hit. Okay, now you can place it where you initially started. Yeah, of course, you can place it there too. Okay, so if you place it there, you have 3 trades open. Okay, now what you do there is if you have 3 trades open here, it'll be a little harder to manage because you won't have a stop loss for 2 trades until the first take profit is open. Okay, that's a little difficult to manage, but if you open your third trade where the first take profit hits at that price, you open a new trade. Okay, now you wait for your second take profit to hit. Okay, when you wait for your second take profit to hit, that's when you put a stop loss. Where are you going to put a stop loss? You're going to put a stop loss where your first take profit hit, where you break even off that trade. I'm sorry, not when you break it, where the first take profit hit. Okay, so this first orange line here, that's going to be your stop loss for your third trade. Now you can see that it hits it. Okay, it hits it. So your trade would have closed out. You would have only taken 2 take profits. Okay, but that's how you go for a third take profit. All right. Now let's say you were feeling a little adventurous, like I was saying. Your third take profit would have been the next place where there was a trader, where there was traders that got trapped short. Remember on the M, traders that got trapped short. Right there. Bam. Right there. Traders got trapped short right there. That's the next place traders got trapped short. So if you look at this horizontal line, now let's go to where this horizontal line goes to. Right here. Right there. That's where it stops. Okay. See, it works. It wicks it right here. It hesitates to break it. This works. All right. So if you would have placed 3 trades up here, you would have been fine all the way. All right. You would have hit take profit 3. But let me tell you this. The higher, the higher the take profit, the more riskier it is. You can see how it was moving sideways. That doesn't necessarily mean it's going to actually go down and hit the take profit. It could have just skyrocketed up. It could have gotten close to your take profit and skyrocketed up. Okay? The higher the take profit, the riskier it is. But let's say you did take the trade and it actually hit your third take profit. That is a 250 pip trade. Look at that. The method works. If you know how to use it, if you use risk management, if you have patience, and if you wait for the formation to come to you instead of you imagining a formation, and you base everything off of the checklist, you will be successful in your trades. Simple as that. Okay. Now these are just M&W formations that I saw that are visible, like right now, that are obvious. But there's a lot of small little ones. I mean, look over here. There's a lot of small little M and W formations and stuff that you can easily scalp, make pips off of. You can find them on every single time frame. Every time frame they show. Okay, M formation up here. All right, W formation up here. They show. Okay, every single time frame. Now I recommend you do not trade below the 15-minute. If you go below the 15-minute, the risk becomes more. Okay, why? Because W and M formations don't necessarily happen by the checklist below the 15-minute time frame. Okay. Okay. So that's basically it for take profits as well as M and W formations. If you guys have any questions, you guys can go ahead and message me while off this video. As you guys know, I'm always available. If you guys are not in the market maker training and you guys want to be in it, you can go ahead and send me a message, and then we'll go ahead and add you to it. Okay. So that's it for tonight, and next Thursday 11 p.m. same time, Pacific time, we'll go ahead and have another webinar. Okay. All right. I hope you guys have a good night and good luck trading tonight. Remember, London, for the people that live in the US, London doesn't start until an hour later. Okay. And originally, it started at 12:30 a.m. Now starting at 1:30 a.m. because of daylight savings, or I don't know what you call it, but they pushed the time an hour forward. Okay. So just remember that. All right. You guys have a good night.